Hello everyone, how's it going? In this video, we're going to talk about Lucid, trading under the ticker symbol LCID. It has been one of the most speculated stocks in the Nasdaq over the recent years. Some said that it is the next Tesla, others believe that it's going to be a giant bubble that'll burst, but everyone involved, regardless of their long-term opinion, would like to see the company doing well, at least in the short term. As one of the heavyweights in a burgeoning industry, Lucid is also one of the few companies that actually has a product rolled out. As time went on, the stock's price action, along with investors' hype and hopes, went through some huge roller coasters. Some are still wondering if this is a bandwagon they want to jump on. And in this video, we're going to look at Lucid and see if the company still deserves to have a place in our portfolio. Lucid went public in the height of the EV craze back in late 2020 by reverse merging with the SPAC CCIV. The market has been very excited about this event because it can mark the beginning of a new era for many shareholders who want to purchase an EV stock at the earlier stages. Back then, Tesla was making one historical high after another, and it seemed that no one can stop this bullish trend ever. People were in a mindset believing that the bull market is never going to end because it hasn't ended for almost 15 years. The only true alternative for Tesla was NIO, and investors were looking for a domestic company with better oversight and perceived safety regarding their investment. Although Lucid was going public back in 2020, it is a company with more than a decade of development behind the scenes as a private venture, and was able to prove to the industry that it is here to stay. We have to remember that the market mood was euphoric, and that there seemed to be no obstacle that lies ahead of us. The current price action acts both as a major cooldown of the market as well as an opportunity for a more sustained development looking forward. Lucid's stock price has been maintained around $10 over the past 10 days, which is important for the retail traders on a psychological level. Of course, given the level of institutional owners in the company, it's not like there's a majority of shareholders swapping their positions in and out every single day. Over the past 5 days, Lucid stock went down by 13.5%. This is mainly due to the number of complaints the Lucid Air received, which also highlights the hardware challenges for EV stocks. The recent sell-off seems to be a continuation for what happened before, ever since the market began to turn earlier this year. Even if there has been a few recoveries here and there, sometimes lasting for quite a while, overall the tendency hasn't changed, as the stock is down by 28% over the past month. What this suggests is that the market doesn't really have a lot of optimism to go around, and that Lucid also needs to prove to the market that it can improve its own product quality over time, as well as scaling its production by the end of 2023. Because here's the thing, if this year we have a couple thousand cars made, next year they're saying that they can make tens of thousands. It's either 23,000s or 32,000s, one of those. Either way, it's going to get much bigger production scale. So they need to have tighter controls in that case to make sure that the number of complaints doesn't go up. Now, if we look at the long-term tendency of Lucid price action, it's not difficult to see that the bubble that gave so much hope to traders around the world has now bursted. The market is no longer willing to blindly follow the latest hype that is behind us. On one hand, the market doesn't want to persist on believing that a bull market based on the assumption rather than actual production, or the perspectives of growth on a PowerPoint slide rather than profitability in the form of dividends. On the other hand, it simply cannot afford to sustain a trend when supply chain issues, doubts on flagship companies like Tesla and NIO, as well as conflicts around the world, high interest rates, and uncertainty about the economy overall have already been plaguing the people's trust towards economy and the financial system for a while. The market has long predicted that there will be a bearish market after such a prolonged period of bull market, and that most stakeholders believe that it's going to be a rough patch for at least a couple of years. The market has peaked twice overall, and the first time was caused by, I would say, pure hype. The second one was triggered by the rollout of actual models. Lucid remains a company that has investment value that is intrinsic within it for the years to come. The main question for everyone is whether they should enter in the trade now, knowing that maybe we still have like a 12-some journey ahead of us. The long grind to lower price levels is likely caused by market trends rather than companies' fundamentals. So in that sense, things are not as alarming as they may seem. On the other hand, we should remember that sometimes, even if those grinds don't have like an actual fundamental reason, they can still last a very long time and bring the title to an unbelievably low price. Hyliion would be a good example showcasing this phenomenon. When we take a look at Lucid's financials, we can easily see that the company's profitability remains to be improved. It is an encouraging sign for sure that revenue has been increasing significantly from $97 million in Q2 of 2022 to about $195 million in Q3 of 2022. On the other hand, the cost of goods sold increased as well, going from $292 million in Q2 to almost $500 million in Q3. It's interesting to note that the cost of goods sold increased more slowly than revenue, showing that Lucid has been trying to control its expenses. Nevertheless, there are improvements to be made going forward. Another element to note is the operating expense. I believe that they correspond to the fixed costs, and over the quarters they haven't fluctuated significantly, which might be a good sign for the company. Nevertheless, the company stands to lose approximately $700 million in Q3 alone, which will add up if we annualize the cash outflows. Speaking of cash, the cash reserves for Lucid is impressive from the get-go, but if we think about it, given that it has a deficitary operation, the fact that it has between $4 to $6 billion on the balance sheet suggests that unless the operations pick up significantly in 2023, we might see additional rounds of dilution over the next month and years. Regarding liabilities, the debt that Lucid took on over the past few quarters has also gradually increased in size from below $2 billion to above $4 billion in Q3 of 2022. Simply put, liabilities provide financing to companies to keep the operations going. They may provide critical cash inflows when companies need funds to operate due to the cash flow cycles and other reasons. They may differ from equity sales in the sense that there would be no loss of ownership, but there will be obligations to fulfill these cash outflows when they're due. If the company fails to comply, it would be considered as insolvent, and the goods would be liquidated, with the equity held by the shareholders substantially discounted, if not reduced to zero. For the moment, I consider that the increase in debt level to be normal, justified by the natural growth of its operations. With that being said, it is something that we have to keep an eye on for the future because it may involve like the going concern and cash flow availability of Lucid. Some additional relevant aspects are regarding the current ratio and the inventory turnover of Lucid. Current ratio defines the liquidity of Lucid's assets and how well they can meet short-term difficulties. This number has been going down over time, suggesting that Lucid will be short for cash or equivalent assets in subsequent periods, so we can rule out additional rounds of share dilutions in years to come. The inventory turnover is a measure of how quickly they can sell their vehicles. The recent statistics suggest that Lucid has no difficulty selling its vehicles, which is a testament of Lucid's brand recognition and reputation, as well as the pertinence of positioning itself at the high-end segment of the sector, which it tends to be relatively more recession-proof as more of its clients actually still have the means to buy new cars. Overall, Lucid's financial figures paint a picture of a company that is growing its operations, but lacks a little bit in terms of discipline and cost control, and needs to scale up its operations to start having positive cash flows. So let's also talk about the shareholder composition of Lucid, because it is something that is quite important to determine if the company is better for trading or investing. Lucid is currently mostly held by institutional buyers at about 32 to 33% of the total float, and this suggests that the price volatility of Lucid would be lower than other growth stocks, mostly owned by retail traders. The reason why that might be the case is because institutional shareholders have far more diversified portfolios and don't mind the short-term volatilities. They also tend to stay in a stock for a longer period of time because it is also a good sign for those of us who want to stay in the company for the long run as well. Regarding the short selling pressure, Lucid has a sizable short position, around 5.2 million shares currently being shorted, which corresponds to around 22% of the total volume. The volume of short positions can help us understand that, what some market participants think about Lucid, and if there is a concerted shorting operation going on from institutional owners. In this case, I believe that short sellers are just anticipating the short, like the stock, going lower due to market trends. There are some real potentials for a short squeeze, but the overall volume for short positions suggests that there is a substantial size of people who believe that things will go worse before they get better. Not necessarily, I don't think that this is a concerted operation amongst hedge funds, for example. If the market trend turns, I believe that much of those who short those positions would be very quickly redeemed, which also form a second wave of additional demand, pushing the stock to higher levels. Based on the analysis above, I would recommend to follow up closely to Lucid's price action and to build up a position over the past 12 months in a more closely monitored version of dollar cost averaging kind of strategy, in a sense that no purchase should happen every time that it is up, and to add to the position every time that it is down, or pulling back over the next 12 months. Right now, the timing might be right to add to the position. Because I recommend holding the shares for at least 12 months, the short-term volatilities shouldn't matter that much. The maximum exposure I would recommend for Lucid is between 5 to 8% of your portfolio.